life, your term show.
All right, Mauricio, look, I appreciate you jumping on, man. I know we were supposed to get together, I guess, last year, and that didn't work out with some travel arrangements. And then I reached out to you this year, and I'm like, hey, why don't you come to an event that we're having? It's very local for you. This is going to be great. It'll be a great chance to see you. And then you said, Nick, I'm not in Canada anymore. I was like, what the heck is going on? So I appreciate you jumping on from where you are. I'm not sharing anything. I don't know what you want to share or not. So I'm not
I'm very happy to share. I'm speaking to you from Georgetown, Cayman Island. It's
cool.
And it's a beautiful, beautiful place.
And we've had some good conversations in the past. And I just want to get, for anyone that hasn't heard those, I just want to give people some context of where your kind of perspective is coming from. So I don't want to get into your whole story, but if you can maybe just give people just kind of a little snapshot about, your travel from originally from Venezuela, your travel into Canada, why that started, and just so people have context as we kind of get into stuff.
Definitely. So I didn't have what some would consider a typical path into Bitcoin. I was born and raised in Venezuela with my whole family. As many of you know, Venezuela was a once great nation that fell victim to authoritarianism, communism, and all the isms. And over time, Chavez took over in '99. His government party is still ruling today through a series of stolen elections. But point is, once my family started seeing the sort of authoritarian disease, start crippling the country and dismantling our democratic institutions, private property. Once that started happening, many families, mine included, the first sort of thinking was, let's just move away while this guy is in office. And we went to Florida for a few years. It was very difficult at the time for my dad to support our lifestyle in Florida, living in Venezuela with his businesses there. It wasn't, his businesses started suffering a lot from him not being there. And frankly, we just couldn't afford to stay in Florida under that setup. So we went back. But when we went back, we learned that this guy was not slowing down. What many thought would be a 4-year, pain was quickly becoming a rewriting of the Constitution, unlimited re-elections, extended presidential terms, and a bunch of just constitutional abuse. And as soon as we got back, my dad basically said immediately after, because I graduated that year, my dad said, you need to leave. Do you want to leave? He didn't force me to leave. But I actually, once I got a taste of what freedom was in the US, I really wanted to go back. Now, at the time, I was applying for universities and I really wanted to go back to Florida. That said, my Florida was very expensive, and my parents' feedback was, why don't you go check out Canada? You have some relatives there. They're in the real estate world. Why don't you go check out Toronto and see if you like it? And in my mind, I was like, oh my God, this sounds great. I mean, it's much better than Venezuela. So I came to Toronto. My second cousin, Julie, she took me under her wing, and massive kudos to her because she basically opened my eyes and opened her network and her life to me in Canada. And I was very happy to get an opportunity outside of Venezuela. So I did my university in Canada, and then I started making a life in Canada. I stayed in Canada from, on and off between, I first got there in 2003 to do my grade 12, then university. And then I formally left, I moved out most recently earlier last year. And my context, the reason I got into Bitcoin was because as Chavismo was dismantling the country, our currency evaporated. And that was Venezuela. What authority?
It's easy to get them mixed up these days. So yeah.
When authoritarian governments start printing money to continue their agenda, there's no way for them to finance themselves. There's no bonds that will get bought. Nobody believes in the bonds, so there's no issuance of debt goes out the window. And many times, Venezuela's case, they were sanctioned, so oil sales were hurting. And so what ends up happening is they don't make the hard decision to stop printing money and put up on a democratic vote and see if people think they're doing okay. They just continue to print. And what they do is they shut down the exits. So they say, you cannot buy dollars. You have more than one house. The second house belongs to me. That's speculation. You have more than one car. The second car belongs to me. That's speculation. Your farm's too big. You don't need that much land to grow these crops. Give me part of the farm. And so they make it impossible for you to store your money in anything or your wealth in anything other than their fiat. They make it very, very difficult. And in this context where everybody needs to get out of the Bolivar and you're buying beans, rice, cans of tuna, plastic chairs, tires, you go back into the barter system, right? Because humans don't just take it. Humans find a way, right? And so you say, oh, I can't, you want me to buy dollars? Fine, I'll buy these bottles and I'll resell these bottles because I can reprice these bottles, right? I can't reprice the bill that says the number on it. So you keep hoarding things that can be repriced or traded that has some value that's not evaporating day to day as they become more irresponsible. And what happens in that situation is that the wealthy people always find a way to get dollars because they have offshore bank accounts at Wells Fargo. They have, many ways to get wires and receive money from overseas. And so they can do an internal Bolivar leg and an external foreign currency leg or gold leg or something else. But it's the people at the bottom, those who never got to travel to Miami to open a Bank of America account, those who never were able to get a vehicle to receive dollars outside of their country, right? Those guys were screwed because all they had was, their only option was to buy cash dollars, which become very risky in these environments. Why? Because number one, there's a lot of fake forged dollars, right? Mm-hmm. So when you're buying cash dollars, everybody was carrying around their little pens and their lamps to make sure they weren't getting cheated.
So this was on the black market that in Venezuela, people were taking the local currency and buying American dollars. Is that what you're talking about?
Correct. But I call it the free market. The black market is the one determined by the government. They are the cronies and the corrupt people that have
That's fair. That makes sense. Yeah.
The black market is the price they set. The white market, the one that we all trade on, is the one that's free. And so, yes, typically whenever a government imposes an exchange rate, there will be two markets emerge. The one that they create, which is the official one, and then the one that they deem the black market, which is everyone else is trading and they're not a counterpart to that trade. Because when they set the rate, they are the only ones willing to, allowed to sell and buy at those rates. So what ends up happening is they'll set an artificially low, fake low rate. This is done for two reasons. When you set an artificially low exchange rate to the US dollar, you can then turn around and say, let's give you an argument with numbers, right? If I say to you that the Venezuelan minimum wage is 100 bolivares, and the exchange rate for a bolivar to a dollar by the government is 10 to 1, that person makes 10 bolivares per month. So it's great. In the black market, a dollar trades for 100 bolivares. So in the black market, that person's actually making $1 a month. And so that's like extreme poverty. So they do this to put makeup on their development statistics. That's number one. And number two is, well, if you're saying that a dollar is worth 10 and the market's buying it for 100, then I'm going to try and buy all of your dollars for 10 that I possibly can and sell them into the market at 100, right? And so they restrict the sale of who can buy those dollars at 10. And the only authorized groups to buy those dollars at 10 become their buddies. Mm-hmm. And so they use that as a way of providing corrupt incentives to the people they want to keep in their good side. And at the same time, it helps them put makeup on their development statistics, which are getting absolutely crucified in real terms. And so that was a long winded rant about my background, but No. It's
because it gives context. Because when you live through that, like a lot of people here haven't lived through that type of environment, right? I shouldn't just say here in Canada. I mean, just in Western countries in general, they haven't lived through that. So this seems like, oh, okay, well, in Venezuela, that type of stuff happens. That really doesn't happen here, except that's already happening here. It's maybe not happening at the same pace that it started happening when you were younger in Venezuela. But I mean, everything starts at nothing goes from 0 to 100. Things start, and it can accelerate from that point, right? And that's where things get, and even if you look at the immigration numbers that have been going on in Canada. And people look around, they're like, I don't get it. What the heck are they doing? They're bringing all these people in. They're not investing in the country. They're not investing in healthcare, roads, schools, any of this. And no one can make sense of it because it's not logical at all. But to your point about putting makeup on the problem, when they have us this slowing GDP, to try to prop up the GDP number, if they bring in more people, they can prop up the high level GDP number, which is like, see, our economy is not doing that bad. But then when you break it down by the GDP per capita in Canada, so the GDP per person, our economy is shit, and it's been shit for years. And that's what finally some people are talking about. They just started talking about that earlier this year because of the election. But before that, no one was even talking about it. So they have all these little tricks. Again, the way you explain it is just to put makeup on the problem. It's perfect because the same things are trying to happen here. And currency as well. I mean, well, I think you probably know this. We don't even have a budget this year. Mauricio, there's no budget in Canada. Like, so who knows what we're spending? Like, I don't understand. Like, I mean, I can't even comprehend that, right? So, but
and there's a lot of games that are played that way because perhaps there is a budget. They just know what will happen if they publish it.
Yeah, of course.
And so there's all these games. So one thing I remember very clearly was at one point, the Venezuelan central bank just went dark with data. And it's still dark with data, by the way. Go try to look at the M2 money supply from the Venezuelan central bank. It's like it dies at 99 or 2002. It's just they stop. They don't care. And so they there will be the amount of games that will be played by central banks, politicians, etc. Are never ending, but they all go towards the same idea, which is gaslighting the population into what the real problem is, because the real problem has some hard questions, right? The real problem is we are overspending and we are overtaxing, and that problem is a very hard problem to solve because if you're overspending, the right thing to do is to cut. Right. And so, but those cuts are very hard politically to be done. Right. You only do them when there's absolutely no choice. And it'll be political suicide. And so they don't cut the budget. Just imagine a fixed expense line that only grows. The best you can do is just cap the rate at which it's growing. And what happens on the other side is you say, well, if I can't cut spending, then I need to tax more. But then you're already overtaxing. And then there's this thing called the Laffer curve. Okay. And the Laffer curve is basically a study that was done that basically says that there is an equilibrium point for increasing taxes. There comes a point in the Laffer or in the cycle of raising taxes consistently that at one point it just stops steepering because the tax that you're putting on is so punitive and ridiculous that people will opt to not pay it. And just start shutting down businesses, leaving countries, because it just makes no financial sense for them to do this. And so many countries, Norway is a great example, the UK is a great example, seem to forget that this Laffer curve exists. And they continue to say, we're going to punish the rich, we're going to punish the rich, we're going to do crazy things like tax unrealized capital gains. Ridiculous stuff, right? And they expect people to just sit there and take it. And these are the people with the most optionality in planet Earth. And so you're expecting them to just say yes. Many times, they will say no. There comes a point into which they will say, no, this doesn't make sense to me anymore.
Well, I have a friend sorry, I was just going to say I have a friend in the UK, business owner there, has done well for himself, and he just got fed up with everything going on. Tax is one of them, and he's now in the south of Portugal. It's like it makes way more sense, right? And when I found out that Ledin has left Canada, like your headquarters, I think we can share that. Is that?
Yeah, we moved our headquarters. We're still servicing Canadian
Canada,
clients,
but you moved the headquarters, and it's just like, and one side of me was happy. I was like, oh, good for them, man. Like whatever works for them, right? That's amazing. The flip side of me was disappointed because I'm like, damn it, like that's another productive company with productive people that are now taking their skills and their investment elsewhere. I'm like, that's not what. In Canada, I want too. And I know before we were talking, you were saying you identify as like a Canadian. You're like, you don't want that either. You know what I mean?
No, listen, like I love Canada, and Canada has given me so many incredible opportunities. I am forever grateful to Canada, but I think that it's important as a person to constantly reassess the changing environment around you. I was privileged in a way in that my nonna, my grandmother, was Italian originally. She migrated to Venezuela with like nothing but her clothes on her back, and I had to leave Venezuela, which was once a massively prosperous country, to come to Canada. I am now in the Cayman Islands. My kids may at one point have to consider leaving Cayman Islands. Like, the world is not a static place, right? Like, if you go back to history, there's been periods in history where the greatest powers were in the Middle East. And then the reserve currency used to be in the UK. The first stock market was in Amsterdam. Now it's moved to the US. What do we expect that those things aren't going to continue to ebb and flow across time and places?
They're just going to last forever.
It's either you understand the trends that are taking place and you start trying to partake in these changes, or you're just going to get eaten up if you ignore them, and you might get sideswiped or blindsided if you're not paying attention to this stuff. How many people, when Venezuela was falling apart, I used to have these discussions. And this is one of my favorite memories. When my parents and I first moved to Florida after Chavez first won his first term, I remember being greeted by Cubans. And the Cubans, when I would tell them, "Oh, I'm Venezuelan, I just moved, we're here for a few years, we're going to be heading back soon," they would give me this somber hug. And they would say, "Oh, buddy," they're like, "you have no idea what just happened to your country." I'm like, "You better be comfortable here." I don't know what else to tell you other than, good luck. And then we would turn around and then it would be like, "You guys are an island. You're like a tiny little thing there. Like we are an oil rich mainland, amazing country, this will never happen to us. Don't worry. Like we have a strong institution, strong democracy." And then boop, 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 boop. And sadly, as a Venezuelan, I started seeing other things happen in countries like, say, Argentina. Like, Argentina was just destroyed by the socialist or authoritarian left in Venezuela because Chavez started financing people on the other side. And so it's very interesting where you see how much damage one political party was able to do. Because, for example, in Argentina, the Kirchners and the Chavez equivalents of Argentina were able to destroy the economy, but they were not able to destroy the democratic institutions. And that's what led to Milei eventually taking over and winning, right? The same thing in El Salvador, right? Like the democratic institutions were strong enough to allow someone like Bukele to come in and just completely rewrite the whole thing. In Venezuela, they did away with democracy. So Venezuela never allowed the pendulum to switch. So they just continued devouring the nation. And it was really sad. And it's when you start seeing, one of the things that I thought was, and again, this isn't just a pun to the particular party or the group. If you look at the economies that are doing best right now, if you look at an El Salvador, an Argentina, a United States, these are countries that are all of them are undergoing serious political and social reform. Mm-hmm. The ones that haven't are the ones that are going down an economic cliff. And one of the things that I was hopeful for in the context of Canadian politics was this idea of something new, some change, right? And it looked like it was going to happen in the last big election we had, and then it just came cratering down. And to me, it's really important for you for you as a person, a member of any society, to understand what the majority of the people around you want, because that is eventually what is going to get enforced and deployed. It's not what you want; it's what the majority of the people around you want. So if you're in a place where the majority of the people just want, more free things, more restrictions and restraint on capital, and there's just an unwillingness to consider any other alternative, the path is very clear, right? Like, want, yeah.
Yeah,
I mean,
no. It's a good point. You're right, because I've never really looked at it like that. Sometimes people will look around like, I'm having conversations specifically with younger Canadians now, who, historically younger Canadians would vote for a different political party than the one in power now, and they're just like, what is going on? Like, we just need change in this country. And they're, but I've never looked at it that it's like, yeah, you don't think about what you might need or think you need. Can't people see it? It's like, what do the masses want? Because if you're in a democratic society with voting, then the masses are going to vote in who they want. And if there's socialist tendencies for people for looking at handouts and they want the restrictions and they want larger government to take care of them and more and more and more, well, then, yeah, that's what you're going to get. And if you're not that, and if they want that, okay, great, like they can have it. But if that's not what you want, then you know what? You got to open your eyes to that and you start looking elsewhere.
I completely agree with you. And I see this massive sort of divergence between what I hear and read about people in places like Canada. And Canada's not alone in this. There's a few other places that are like this. But I hear from people saying, A, I can't find a job, right? Mm-hmm. B, if I find a job, I don't get paid enough to make ends meet. And so people are, the majority of the people are suffering, right? Like if you look at the percentage of people that make, call it 300K and above Canadian, we're talking about a very small subset of the population, right? And so the social contract, the problem is that the social contract between a person and a government doesn't break for everyone at the same time. So for example, if you're a person making, what's minimum wage in Canada again? 50K?
Yeah, it's like, I don't know what this works out the salary. I think it's like 17 and change somewhere in there. So it's probably around that, a little bit less even.
Call it 50K, right? Like you're paying very little taxes. Okay. You're paying 10K, maybe 20K. You're getting free healthcare when you need it. We can argue about whether it works and how quickly it is or should be, but it's there. You can have access to a public school if you have children. Again, you can argue whether it's the quality of school you want or not, but that you can get it. So the social contract for that person works really well. Flip to a person that's a high-rising engineer in an up-and-coming tech company and is making, call it, I don't know, 250. Okay. That person's at the top of the ticket. That person gets taken $100 and some $1,000 off their paycheck, automatically. A healthy young person with no kids. What is a social contract for that person?
Yeah, if they're not taking from the system.
I'm not going to the doctor. I'm going to the doctor once a year. Nothing major. Thankfully, I'm a healthy guy. Then you have no kids. Your kids don't go to school. Well, you're not really getting that benefit. So you're just really paying $120K, and they're in tech, key point, which is where everything is going, AI, tech. Oh, you get an offer from a American company that says, I'm going to pay you the same, but you're going to come here to Florida where there's no federal tax or no state tax, only federal tax. So you're only going to pay 20%. And so the person immediately nets out much higher. Because
and cost of living, like housing in many, like maybe not Miami or something, but in many places in Florida, housing is a fraction of what it is here too.
So here's the key part. The system starts becoming uncompetitive for your highest taxpayers.
Mm-hmm. And they look elsewhere.
And they start because at the end of the day, if you're in tech or you're in AI, you can be doing your work from anywhere. We should want you to be here. We should make it easy for you to be here. If you think, what is Portugal doing? What is the UAE doing? What is the Cayman Islands doing? They're all begging. What is El Salvador doing? America is doing the same thing. They're begging qualified people to come in, begging them. Whereas in some countries, you're making lives of these entities easier, or at least not trying to stay at par with what other competing nations are doing.
Yeah.
And so I think it's, you got to look at a country almost like in the context of a business that has clients. Their clients are its citizens, and you need happy, qualified, good clients. There's great clients and then there's crappy clients. And that goes for any business. That goes for a country. That goes for in the context of a client, you're not a crappy client. You're a crappy client in the sense that you take way more than you produce.
Yeah.
Right. So for them, in that sense, you are an expense. You're not an engine you're not accretive to the the overall system.
Yeah,
and
if you're a producer and you contribute more, they want you.
And so they should want you.
Yep.
It's in their best interest for you to be there. And so I think countries that look at this in the right way and then take the right approach to bring this in are going to do much, much better in the next 10 years than the countries that just fail to recognize that the future is digital and it's global. And you're not only just competing against, Ontario is not competing against BC. It's not competing against Alberta. It's competing against Florida. It's competing against Abu Dhabi. It's competing against Dubai. It's competing against Singapore. And so you have to keep that in mind.
Hey everyone, before we dive back into the podcast, I've got a quick shout out about the Your Life, Your Terms report. This is Tom's weekly newsletter where he and Nick share real stories, experiences, and powerful insights to help you live life on your terms. Each week, Tom breaks down the economy, real estate, macro trends, and Bitcoin, and gives you actionable steps to make these insights work for you. No fluff, no vague predictions, just a clear path to thriving no matter what's going on in the world. Tens of thousands of Canadians are already getting the real information they need to level up their lives every week. I can honestly say it's the only newsletter that I've stayed subscribed to for years. It delivers real value that keeps me coming back for more. Join us and start getting the insights and tools to create the life you want, plus entertaining and inspiring stories from Tom and Nick along the way. Sign up for free at rockstarinnercircle.com/get-started and start living life on your terms. That's rockstarinnercircle.com/get-started. Your first step to living life on your terms.
Yeah, and I think that's accelerated now. And I want to move over to kind of like what's going on with the Bitcoin, even stablecoin stuff in the world, because I enjoy this conversation, but I know we're going to run out of time. But along the same lines, I think that's what some people, when you don't see what's happening maybe on the digital side of things, and that people understand the internet and what it's done to retail and banking, like so many different things, and not so much banking, although there's just apps you can use, but it's really transformed so much, right? So, and people don't see, if they don't see the new financial system that's really being built out, that's a network-based one, it removes these barriers that used to protect these nation states. And I guess that's what I'm kind of asking you, because I know so let's look at there's so many things I'll ask you. So let's go to stablecoins first, because you in that world. What have you guys seen, just in your communications, your travels, your business? What are you seeing with adoption of stable coins and the usage of stable coins in different parts of the world? Because from my understanding, it's just more and more people are looking to opt out of their local system into a more global system. We'll get into Bitcoin as well, but just even as a first step, because they're like you were talking about Venezuela. Look, I'm in Canada. Where was I? Where did I go before? Oh, in Europe this year. Holy crap. When everything that hit my credit card, I think it was hitting my credit card at 1.64 or something, the euro to Canadian dollar. I was like, what are we doing? What kind of currency do we have? So it's I want to opt out into other currencies because what I'm working for in Canada is just losing value faster than these other ones. So that's why I'm curious in the stablecoin world.
Yeah, so stablecoins, we're going to stay a minute on this because it's it has huge implications that I think some people aren't necessarily aware of.
Okay, because we got to leave time for Bitcoin and at the Bitcoin loans, because we get asked about that all the time too. So we got to leave time for that.
So I'll try to keep it quick, okay? So right now, when you deposit $1 in, say, at Canadian bank, okay? A US dollar in a Canadian bank is known in the industry as a euro dollar. And what is a euro dollar? A euro dollar is a US dollar that is deposited in an offshore bank. Why is it called a euro dollar and not a dollar? Because it doesn't benefit from the same privileges as a US dollar deposited in a US dollar or a US bank account. US banks have this thing called FDIC insurance, similar to what we have in Canada. This means that deposits up to $250K in any US dollar in any US bank are protected or guaranteed. Amounts over $250,000 are not protected. And this is, in euro dollar terms, nothing is protected. So your deposits in a Canadian bank, your US dollar deposits in a Canadian bank are an uninsured liability you have to that bank, okay? If you're a person, now in best practices in cash flow management means that if you're a company that has $1 million and you need to keep it somewhere, you're not going to go and keep that you're not going to go keep the full million in one bank, because 750 of it are not insured. So best practices is two things. You either spread it over 4 banks, you insure the whole thing, or you 250 in one bank and you buy the rest in treasuries, because treasuries are guaranteed by the full faith of the US government. It is better than a bank because it guarantees all of the amount, not just the first 250K. Stablecoins are tokenized treasuries. What does this mean? It means that the backing of a stablecoin is more robust than depositing that dollar in any bank outside of the US for any amount. And so if you are a Canadian corporate, if you're a European corporate, if you're a British corporate, if you're a Singaporean company, and your options are deposit US dollars in my offshore bank or buy stablecoins from a regulated US issuer, it's not even a question. So stablecoins are going to eat into the deposit base of a lot of these offshore banks, the US dollar deposit base of a lot of these offshore banks.
Let me interrupt you for a second. What do you think about the risk, though, to the centralization? So, like, if you buy, because there's a couple of different providers, and I don't want to go too far down this path, right? But do you assign any risk to those providers that are controlling the stable coins, whether it's the two big ones like USDC or USDT?
They are regulated by the U.S. government now. So
that
the US, they are vehicles for the U.S. government to extend dollar dominance. They are key strategic assets for the U.S. government. They will not allow a default on these things. They will probably bail them out faster than they bail out banks.
Got it.
Because this is the bank for the world. And what you said about people opting, now let's switch to the adoption side. Venezuelan people, like most people around the world, just want their money not to vanish. Okay? Yeah. And their idea of money is, for most people, the US dollar. Bitcoin is most often seen in most people as an investment. They don't really see it as a payment thing in most of the world, and especially the people that I talk to. They want to spend and transact and price things in dollars because the dollar is the most widely accepted money. If people want to use the same money as everyone else because it's easier, there's less friction, there's less exchange fees. You just want to settle, and everybody wants to settle commerce in US dollars today. So, and another really interesting dynamic is a place like Bolivia right now. Bolivia by the way, Bolivia just had a fantastic election. I'm very happy for the people of Bolivia. They've now escaped authoritarian communism, and now they're back into the democratic path. But one of the super interesting things about that is they did the same thing. Government was overprinting, the currency was going bananas. They then created a capital control, which is like the price of the Bolivian currency is this much. It created a parallel market, and the parallel market started spreading far, far, far away from their official market, and they saw a problem there. The same government that was overprinting and created the problem was the one that allowed stablecoins to be transacted in by their local banks. And you want to know why?
Oh, yeah. No, why? Because that seems counterintuitive.
Because allowing more people to... So a dollar is like any other good. It's a supply, and the price of a dollar is supply and demand. So the price of a dollar in any other currency is based on the supply and demand of that currency and the dollar. What happens when the governments start going bananas is that nobody wants to sell their dollars. So there's a restriction in the supply of dollars. Those who have them don't want to sell them. So if you want to keep the prices in check, you need to allow more supply to come into the system. How do you allow more supply to come into the system? You can't bring cash overnight and drop cash into an economy. But you let stable coins come in and you let arbitrageurs do their thing. Oh. And so you allow people to start bringing in stable coin supply to appease that demand. And what that does is it makes even the black market price that they believe is the black market even keeps that in check, because you're allowing more dollar supply to come into the system. But now, mind you, that's a Trojan horse, because the more dollars and stablecoins get inundated in your system, people just stop. It's a one-way street. They don't opt back into the local currency. And so I feel my view is that as more of these, everybody's looking at the US dollar, wanting it to collapse and predicting when it's going to happen. The US dollar is going to be the last one to die. We're going to start seeing the death of this peso and that naira and that lira. And those guys are all going to get dollarized by proxy. And so I think you're going to see two things happen: hyper stablecoinization, if you want to call it that, of world in terms of commerce. And then that's going to lead people to say, wait a second, this one's getting debased too. I don't understand. Even it's lower rate of debasement, but I can still feel it. And so I'm just going to opt into this one that doesn't get debased, which is Bitcoin. Or the best combo, which is long Bitcoin. And when you need dollars to spend, you borrow from it, get the dollars you need, and then you use those dollars. And then you use the debasement effect of the US dollar to be a tailwind on your dollar debt, rather than a headwind on your dollar savings. And that's one of the big, sort of overarching thesis as to why Ledin is built the way it is and the service is built the way it is.
Yeah. So let's jump into that, because what you're saying makes a lot of sense to us, because we've looked at it. So ever since about 2008 is when we got serious, during the great financial crisis, when we got serious to understand the financial system. So what the heck really happened here? And then we were already kind of real estate investors before that, but then we started looking at real estate in a different light, because we're like, oh, hold on. We can borrow against the real estate or take a mortgage to buy this asset. And as the value of that debt gets inflated away by, we can pay it back with cheaper dollars, and we benefit from that. So exactly the same strategy you're talking about, the Bitcoin stuff, right? And then we took those savings from, and we openly shared this with our investors. We at that time, we didn't understand Bitcoin. Well, there wasn't Bitcoin early on, but then we didn't understand it at first. And then we were like old school investors, real estate and gold. Because then we were trying to save in like some hard money to protect our purchasing power. That was it. It wasn't like fancy. But now now in hindsight, we look brilliant because it all worked out, like gold with its ripped and stuff. So and then now we've been talking about Bitcoin for a while. A number of our people we know have invested in some Bitcoin. They're like, guys, what can I do with this? Because I don't want to get rid of my Bitcoin, but like I can't do anything with it. And then I tell them, like, guys, you can actually borrow against your Bitcoin. They're like, what? And it's like groundbreaking to them, which is like we've been talking for 45 minutes, which is like that's what for anyone that's listening to this, that's what Mauricio and Ledin, like at Ledin, that's what they do. Like in Ontario specifically, that you guys offer that in Ontario.
Yeah, so you actually can do exactly what you did with real estate with Bitcoin, but in a much better and more efficient manner. And at Ledin, you can use your Bitcoin as collateral to get a US dollar loan. It takes 2 minutes to set up an account. The application takes 2 minutes, and you get your funds. If it's US dollars, typically within the same 24 hours. If it's stablecoins, you get them like that. And it's faster, it's more accessible. It will be cheaper than private mortgages. We can get into a conversation around government subsidized mortgage rates versus private lending and rates around these types of products. But the spirit of the transaction, the concept of the transaction is the same. You're holding a hard asset and you're borrowing a weak currency from it. Mm-hmm. And the weak currency gets weaker, and it's that same dynamic that reprices your collateral asset higher. So it is really not different at all from having borrowed against your real estate to reinvest into other things. Basically, you're borrowing weak assets or weak currencies, and you're using that to buy hard assets. That's really it at the core.
Yeah. And what's the current interest rate on a bit? So what's the loan to value that you guys typically do? And what kind of rate? Like, I mean, not an exact rate, like what's it kind of look like right now?
For sure. So the rates, it's 50% loan to value. So you can borrow up to half of the value that your Bitcoin collateral that you're posting. So if you're posting $250,000, you can borrow $125,000. The interest rate is 12.4% APR. And for our private wealth clients and loans over $1 million, we can offer custom rates that are a little more competitive given the amounts. That said, the process is seamless. There are no monthly interest payments required. we do not underwrite you based on your credit score or your income. We underwrite you based on the value of the collateral. And that's a big distinction between these loans and the loans you took with banks previously in real estate, which is they weren't underwriting you on the asset. They were underwriting you as a person. Yeah. And then on top of that, they took the asset. So they were underwriting your servicing capacity, not the value of the asset. We're underwriting you on the value of the asset, not your servicing capacity.
And the Bitcoin, the price, the dollar price of Bitcoin can be volatile. So if it drops below the 50% loan to value, I guess there's just a cash call.
Correct. So it works very similar to what somebody might have used a margin loan. Is basically as the price of the underlying collateral you pledge goes down, the loan to value of the dollars we lent you versus the market value of the collateral starts creeping higher. When that number reaches 70%, we notify our clients to send more Bitcoin so that the loan remains healthy. If the LTV ever gets to 80%, Ledn automatically sells however much Bitcoin it needs to repay the loan and releases the rest back to the client. So it's a pretty simple model. And then the Bitcoin, by the way, which is an important thing for all Bitcoiners, the only type of loan Ledn offers is fully custodied loans, meaning the Bitcoin always stays in custody, either our custody or one of our funding partners. It is not lent. It does not move. There's nothing happening to that Bitcoin other than safely securing the dollars we just lent to you.
Mm-hmm. And you guys got to, I want to come, okay, let's touch on that, because I want to talk to you about that, because you guys got to have some credibility in that space, because when a lot of things blew up a couple of years ago, what was that now, 3 years ago, I guess, in June, right? When all that stuff was going on, you guys weathered that storm and you went through it. And that's when a lot of platforms like yours that was offering loans and different, there was the rehypothecation going on and they disappeared. And credit to you guys, man. Because that was a time when there was a lot of shaky ground everywhere. And I'm sure there was still I think because I saw some communication from you guys, I know there was, some challenges just in the space overall, but you guys weathered that storm, you came through it and you came out the other side. And I'd imagine you're stronger because of it, because you're the guys that have done it and come out the other side and you didn't play in that game.
Yeah, no, thanks. I can talk for quite a bit about the events of 2022, but in a nutshell, before that event, Ledn was the 5th or 6th largest lender. We were always behind or under the shadow of Genesis and BlockFi and Celsius and Voyager and all these other companies that had a myriad of tokens and were doing all sorts of shady stuff. But they were bigger than us, louder than us, and everybody knew us as the boring Canadians. Actually, that was the endearing term they gave us. And I remember, leading up to that event, people would ask us, why aren't you guys adding more assets? Why aren't you guys launching newer products? And why are you guys paying such little yield? And why are you charging so much on the loans? With Celsius is lending me money at 1%. Why is your loan coming out at 8 or 9? And we would have to say, we were always candid and open and said, we don't know how somebody could be lending you dollars at 1%. Our cost is 9. Look, these are the rates we pay. And so in 2022, we went into that event as the boring Canadians, the ones that had proof of reserves, Bitcoin only, very simple business. And we were up against the very loud companies that were paying yield on all sorts of other assets and, launching their own tokens and juicing their own tokens. And when the collapses started, they started, what brought a lot of these companies down wasn't necessarily their Bitcoin-backed loan products. The asset-backed lending is a very simple activity. If you just give me an asset and I keep it safe and I lend you dollars, you repay me the dollars, give you back the asset. It's very simple. The issues started with, they were starting to rehypothecate the collateral that you had pledged me. And so they lent it to someone else that lost that money. And then when you repaid your loan, I didn't even have the collateral to give it back to you. So number one is rehypothecation, because they were lending that Bitcoin unsecured. They weren't taking any collateral for those loans. On top of that, they were trying to pay yield on things like Shiba Inu or their own tokens, things that nobody wanted. And so they had to take these deposits turn them into something people wanted, and then they lend them back out. And then they didn't hedge those conversions. Mind you, all the loans that they did, or the majority of the loans they did to earn yield, were fully unsecured. And so when Three Arrows went under, which was one of the biggest borrowers in the space for lending flow, everyone was basically caught naked. Lennon actually was, Three Arrows came by our desk 4 times, and we denied them every single time because they didn't provide financial statements. And when things collapsed, and you saw everyone that had lent to Three Arrows, basically every one of them had lent to Three Arrows. So they had incredibly poor underwriting, very bad practices. And as a result of all of this, I still remember when all of this stuff was happening and people were nervous. I was having calls with clients saying, Mao, I love you guys, but I'm going to withdraw my assets to be safe. I don't like what's happening in the space. I'm like, listen, I completely get it. Take your money, bring it back when you're ready and you're comfortable. We'll be here. We'll be here when you're ready. And I was talking to my dad. He's my mentor. Like, he's obviously a successful entrepreneur. And so I was telling him what was happening. And he I still remember what he said to me. He goes, so you're telling me that the 5 companies that were bigger than you and louder than you all collapsed? And I'm like, yeah, Dad, it's pretty dire. He's like, yeah. It's like, you're the only one left, and you survived this, and no one else did. And it was like, well, yeah, it's the market's like, it's cratered, but we're the only ones still here. He's like, son, you've been given a gift. Like, do not mess this up. And
that's
the 3 years,
I got goosebumps when you said that, man. That's so cool.
The 3 years after that event were very hard because we had to basically go and tell the world, or show the world, that it wasn't Bitcoin-backed lending that was broken. It was fraud and bad practices, that this can be done responsibly, that our clients have done well. And when basically the market started recovering, and then in the name of this activity started getting people started understanding what had gone wrong and why companies like Lennon were still great places to go borrow against your Bitcoin. People started coming back in droves. Oh, wow. And when they were coming back on the second time, they were saying, I don't want to take any chances. I don't care about your rates. I don't care about your app. I care about your track record and proof of reserves. And who had the best track record and who has the longest running proof of reserves program in the industry? Us. Yeah. And so today we've become the largest consumer-facing Bitcoin-backed lender in the world. And that is something we take with great pride.
The boring Canadians. That's great,
And listen, we are the tortoise in the race. And we are right now, we're in a very privileged position. We're leading the market. We're having obviously new competitors come up left, right, and center. Sure. Because they're seeing we're doing well. That's totally expected. That's par for the course. Everyone's going to try to come and do what we do because it's a great business and it helps people. And so our job is to we already got to the front of the pack. Staying at the front of the pack is also a very important thing that you have to be able to execute and continue to deliver. But being through what we've been through and knowing where we believe this thing can go, we are laser focused on winning and being the best Bitcoin-backed lender in the world.
That's awesome, man. Yeah, that you said something important, that the tortoise wins the race. I mean, so recently with the high-flying Canadian real estate market, we had so many people coming into us who were like, guys, why aren't you doing this? Why aren't you doing this? You should be looking at this. You guys don't know how to make money, like real money in real estate. And we're like, yeah, we're going to steer clear of that. That's fine. And when the market turned, there's a lot of those things that blew up. And we've just been plodding along, with there's really something to be said for that. And I know we're running out of time. I just want to touch on a few quick things. So I'm curious what the Bitcoin rates were before versus now, because my understanding, my belief, not even understanding, it's just from my observation, I guess, is that they've come down slightly. And to me, that means that just globally, there's just this more and more people are looking at Bitcoin as a better form of collateral, like the quality of collateral, or the way they view it, that it's in their eyes, or in more and more people's eyes, it's becoming a higher and higher quality of collateral versus what it was 5-10 years ago. Is that true? Have they trended down a little bit because of that? And I have two more quick questions. I know we have a few more minutes left. So
yeah, no, that is absolutely true. I think a few. So there's two components to an interest rate, more than two, but to overly simplify it, there's every rates market dances to the beat of the Federal Reserve funds rate. So every interest rate typically in the market is comprised of the risk-free rate plus a risk premium on top of that, depending on the activity, right? So if you're lending against used cars, that may be a bigger premium. If you're lending against gold, that might be a tiny premium. And so there's the two components, right? Like there's the base, which is Fed funds, and then there's the risk premium. If you remember back in 2021, we were at zero interest rate environments. So the entire stack, the entire rate was made up of risk premium, right? And so back then, leading up to 2021 collapse, that risk premium was in the order of 10%. Right, like those were the sort of rates going on at the time. Fast forward to today, the rates in these products are 12.4, but the Fed funds rate is 4.5. So basically, if you look at the risk premium over Fed funds rate, it's actually compressed quite significantly. Mm-hmm. And it's going to continue to compress over time. And what's also going to compress is the actual risk-free rate, because we're now about to get into the cutting cycle. Mm-hmm. So you're going to have two forces grinding those rates down and making our loans increasingly more cost effective. And by doing so, they will become much more useful for a lot more things. And I believe it's what's going to lead to this, Cambrian explosion of Bitcoin financing, which we're already seeing, I would argue.
Yeah. And then you guys went, and so now I understand you guys were getting pressured for a while, because at one point you had some ETH products, but you recently made an announcement that you were just going Bitcoin only. And is that just because in your view, you've just seen like that's the future and that's it?
There's a few things. Number one, we listen to our clients. Our clients are Bitcoiners. They want focus. They want the best Bitcoin service out there.
Got it.
And the other one was we added Ethereum originally a year and a half ago to help bring Celsius clients out of Celsius bankruptcy. And we actually refinanced 70% of all Celsius borrowers that could refinance their loans. And the challenge with that was the court. They all had Bitcoin loans and a bunch of altcoin loans to give it a nice name. But the court said that if you wanted to refinance your Bitcoin loans, they will go in Bitcoin, and if you wanted to refinance anything else, they would go as ETH. But the parties that were coming up to the table to help these people refinance needed to accept both, because otherwise they would have to break up a client's claims into two different platforms. It just makes things a lot more complicated.
Got it. Okay.
A lot of these Celsius clients were our clients too. And they came to us and said, guys, could you please make a bid to get us out of bankruptcy? We want to go nowhere else. You guys were the only loans we had standing left. we really want to, if we're getting out of here, there's only one place we would go, and it's you. So please help us put this together. So obviously at the time and still today, it was a big opportunity for us to, grow the business and hopefully get these people to switch over to Bitcoin-backed loans, and then, help them kind of see the whole light. So we added Ethereum. We brought them out of bankruptcy. Even a year out or a year into that process, Ethereum-backed loans were 1% of our entire book. And it was just a matter of focus. And another anecdote I like sharing is every Friday we put this thing called Feature Friday, where we ask clients what you want to see from Ledden, what do you want to see us build? And the number one most recurring request week after week was get rid of Ethereum. And so we listen, it helps us focus. It lets us stay Bitcoin only. And that's a decision for which we've been, I would say, greatly rewarded by the numbers, and the feedback we've gotten from our clients has been an amazing few months after the announcement. And I think it's just the direction where things are going. People want simple.
Awesome.
And it's been great for us, and I'm very excited about the future of Bitcoin and everything. I'm not saying you can't buy Ethereum, you can't like Ethereum, but
No,
for us,
the focus thing's the most important. It makes it just clear. It makes it very clear when you have a simple purpose. Look, Mauricio, we're at time. I had one more question. Do you have a few minutes for it?
Yeah, let's do it.
To run. Okay. So the last question I had is really just around Bitcoin and real estate, because in our space, we take notice to a number of those conversations that are going on between Bitcoin and real estate. And there's, different points of view. And I just wanted your thoughts to give you some context. Leon Van Koom, he's been at a few different conferences.
Yeah, I know Leon.
So Leon came out. So he came out to our last event as well. And in his very German engineering way, because he's like very technical in the way he explains. So he's awesome. Like I love Leon, just to be clear. But he just he breaks things down so well, and it just gave people a lot to think about. And I think the way we look at it is one is real estate's a need, but there can be some of the monetary premium that comes off it. We look at real estate as another asset we can leverage. We kind of look at it as like one foot in the new system, the old system, as we still play in the new system as we transition over. So we kind of look at it in a variety of different ways. And I'm just wondering I know it can be a long conversation, but just at a high level, what do you think about that? Do you see it as like real estate now? Real estate is just old school. Do you see a world where they play together? Do you, where are your thoughts on that?
I would say that. So I come from a real estate background. My fiat life prior to Bitcoin was basically high-rise residential condos in Toronto, and then before that, my father was also a developer for a period of time in Venezuela. So I'm very familiar with the dynamics of real estate, and I think that's also why a lot of the real estate people gravitate to Bitcoin so seamlessly, because it's just a hard asset dynamic, weak currency dynamic. I think. I'll share a bit about my sort of personal approach, right? Like I have a hard time looking at real estate as an investment in the sense that it can outperform Bitcoin. I would like to, in that same breath, I can tell you that diversification is a consideration for a lot of people in a lot of portfolios. So I think real estate and Bitcoin complement each other very well, in that one is a tangible physical asset that is geographically restricted and that has real life utility in the sense that you can go and live in it, right? Or you can rent it out for yield, and you're not really taking that much more risk of loss other than, wear and tear. So it's a great sort of physical, tangible, yield producing hard asset that cannot be produced as easy as fiat. And then on the other hand, you have this intangible, digital, non-yield bearing, self-sovereign asset that you can take with you anywhere you want, right? I think that, where you want to carry the proportions depends on each person, and not only the person, but their time and their lives and sort of how much risk you're willing to take versus not. But I see Bitcoin, real estate, and gold as all three of them being very complementary of each other in their own particular ways. And I would say that as a person, you just have to figure out what is the right mix for you of having of those three things, right? From a sort of long-term anti-fragile asset perspective or a sort of savings management perspective. That would be my approach. I think many of my clients...
Very political. No, I'm joking. No, it makes sense though. That's kind of how we're playing the game. So I have bias towards your answer because it kind of makes sense to me, right? So, but sorry, you were saying you have clients?
Yeah, no, listen, I have a lot of clients that use their Bitcoin to buy real estate, to use Bitcoin-backed loans to purchase real estate. A lot of my clients do that. I've seen a lot of clients taking out money out of their HELOC to buy Bitcoin, right? And so the two things are you can go in either direction depending on where you are, but in the period of time that we're going into in the next 10 years, as I look ahead in the next 10 years in a place like the United States, Canada, the UK, Europe, if you look at the revolution that we have happening right now under us, there's two massive political pressures that are hitting against each other. One is this concept that monetized real estate is bad for a society. Right? Because you have a lot of pressure from the people saying, I don't want to pay these prices. It's very hard for the governments to keep creating these programs to help people catch on.
And it's the investors' fault. It's the investors are the
correct.
Yeah.
Now, Nick, whether it's right or wrong, it doesn't matter. It's what the majority wants, and the majority of the people don't own homes, and so they're going to want home prices to come down. So you're going to have a massive wave of political pressure trying to bring home prices down. At the same time, you have central banks outside of the United States scrambling to get rid of their U.S. treasuries. And they're replacing them aggressively with gold. And soon there will be a discussion around Bitcoin eventually, maybe not now. But basically what I see in the next 5 years is a massive potential of appreciation for things like gold and Bitcoin that have systemic tailwinds to them as assets over the next 5 years, versus real estate, which I actually see challenged in that governments have an agenda to keep those prices contained, if that makes sense.
Yep.
And so that to me is the sort of broader macro picture through which I look at those three assets in the next 5-10 years.
No, I think it makes a lot of sense. And it's why we've been having the conversation with our clients as well. And then it's because we're seeing them, like some people that have had some properties, just like you're seeing some clients leverage their Bitcoin to buy real estate. We're seeing some people that were in real estate. They're like, I should probably have some of this stuff. And they're leveraging the real estate. They have a cash flow component. And they're like, so if I just take some money from this asset, the cash flow offsets the carrying cost of that asset, I'll dump it in this Bitcoin. And then I'm hedging my bets if I have some of that. You know what I mean? So we're seeing, we play in the opposite space as you, and we're seeing the same thing as people moving over to that space as you're seeing, go back and forth at least, not moving over, they're kind of going back and forth. So, yeah.
And I think, again, this is just, again, I'll say it because I feel this way. In the next 5 years, given the political volatility we've seen, people are going to look to keep optionality. And how do you keep optionality? If things go wrong in your country, the process to leave should be as least painful as you possibly can. And so selling a property is great, but it's not very liquid, right? It takes months to sell. It takes big percentage fees to get things sold and pay and transfer taxes and all this other jazz. So it's not as quick and liquid to move. You can't take it with you. Bitcoin, if you need to sell it, one click. If you need to move with it, click, buy the ticket, get out. And so people are going to look for things like, if they don't have Bitcoin, having some Bitcoin. If they have a 50-50 Bitcoin real estate portfolio, they might try to go 60-40 on Bitcoin. If they only have one passport, they might start considering getting a second passport in case things go wrong. These aren't things you're going to go and do immediately, but it's like writing a will. You don't write a will thinking you're going to die tomorrow. You write a will because you may die. There may be an accident. Yep. And so you don't want to leave people scrambling. And so that's really it's insurance.
Yeah, we're seeing people move their portfolios too. Instead of having all of it, they understand jurisdictional risk, and they're like, instead of having it all here, I don't mind still having some real estate, but maybe I should sell it in this location and have some in this other location because I feel like it's a better option overall. Maybe they like the government better or whatever the case might be. So all the stuff you're talking about, man. I appreciate your time. We went a bit long. It's just always insightful hearing kind of from your experience and everything you're doing. So I appreciate you jumping on. Appreciate you sharing it so much, man. Mauricio, thanks so much. Oh, for anyone that wants to, do people want to find you on Twitter? Look up, it's just ledn.com, right? LEDN.com?
Ledn.io is our website. Our handle is @hodl with Ledn. And then my personal handle on X is Cryptonomist with an A at the end. So Cryptonomista.
I was just going to say, I just think for anyone that, even if you're not heavily into Bitcoin or anything, just to follow this stuff, look at what Ledn's doing, look at what you're kind of sharing, just to understand what's happening in the world, because this new system is being built out in front of us, and you're doing yourself a favor even if you understand, even if you're not in it, at least you can see it and understand what's happening and not be blind to it, because it's going to happen whether you're a part of it or not. So you might as well kind of, in my opinion, just understand what's going on, right? So Mauricio, thanks so much. I really, really genuinely appreciate you jumping on.
My pleasure, Nick. I love what you guys do, and I hope we could do this again soon.